right, we're back on the channel, and I want to let everyone know that in the new year, I'll be back on the Discord recording live every day, Monday till Friday, unless I announce I'm not trading that day the night before. I'll be posting that in my YouTube. I'll be posting that on my Instagram. And yeah, we're basically back. The new year is going to be fire. 2026. I want to get everybody passing prop firms and getting you to payouts. In today's little lesson, I want to show everybody the virtue of patience and what patience can do for you and how I can identify trends as well as trend momentum before they start. So I want to show you this little range right here. This is the all-time highs back here. This being the all-time high right here, you can see that we broke it just before Christmas around the 11th of December. The all-time highs were broken here. We had this huge pullback into this bullish PD array right here. And you can see that the price has rallied up into the premium. So I've marked in high time frame premium discount range. And how I determine that is, you see, we actually were trading on this leg in here. We've come up on the 4-hour here, and we haven't broken the high or low of this range. However, we have a significant low being formed right here, closing over the swing low right in here, which tells us now that our new range will now be in here because of the significant pullback. So what you want to do is the leg that you're trading in, you go to the left and you take your GAM box out. I've marked the 50% of the range right here, and I've labeled it the high time frame premium discount right here in this teal colored line. Over to the 15-minute. These are the trends that I like to look at on the 15-minute, and I do look at the half hour, and of course I look at the 1 hour. But I look at this cross the 50-20 here, and especially this 200 right here. We're trading below it, which means that we are in a downtrend, but it is a momentum downtrend. But this signal right here is what tells me there's a trend momentum, right? Because essentially it switched from the 1 minute to the 3 to the 5, all the time frames to the 15. And the 15 is good enough. So if we're trading below the 200, that is bearish momentum. So basically we have this downtrend here formed with the cross of the EMAs, and that's how I determine the trends. And I put a lot of weight on this 200 right here because if we're trading above it, it acts as a trend line. So even if the signal switches to a downtrend and we're above the 200 here, I consider it still an uptrend no matter what the signal says on the 15. So what I would do is I'd go to the 30-minute and I would verify. And if the 30-minute was also up in that case, in this case it's not, it's down, I would consider it still an uptrend no matter what the 15-minute signal did. I don't really want to make a video about it. It's pretty self-explanatory. The cross of the EMA, the 50s on top of the 20. You should look it up. Okay, moving forward here. I want to show you the hugest trap, and what it is they're buying in the wrong zones. The trends are down like I showed you in the 15-minute, and they're above in a premium range. We're still in a premium range, and the trends are down, okay? So in that case, you don't want to take any buys in the premium. I'm not saying you can't take any buys whatsoever in the premium. You can, but you want to wait for two things. You'd want to wait for a sweep of a major area like the daily previous low, and you'd want to look for areas, key areas like the weekly previous low. So basically, major liquidity points is where you could get in to a buy that would be counter trend, and it's finished its job in the premium. Now it wants to come, smart money wants to come to the discount and buy down here in the discount. Does that mean the price will ever return to the discount? It may never. This could perhaps be the new swing low of right up here, and that is the continuation of the entire price range, price action. So this will save you a lot of losses. So identifying what zone you are trading in. The first thing you want to do is you want to go to the daily. On the daily, you want to identify the daily previous high. So DPL, DP, and your daily previous low. All right. So you also want to determine the 50% of the range of the daily previous candle. Once you've discovered the 50% of the range, now you know where smart money buys and where smart money doesn't buy. So in this case, we're no longer in the range of the daily previous candle. You can see on the daily, we're late in the day and we're trading below the daily previous low, which means two things. It means that You shouldn't be looking for buys whatsoever, especially in this premium range here. Price is bearish, and looking for reversals is going to be very painful for you. So you want to know what location you are in with price in the range. So in this case, premium. Has the job been completed in the premium? Yes, we've taken out the all-time highs, but over here we failed to. So we could retest it. Number two, what are the trends? The trends are down in a premium. On the 15-minute, how I showed you, how the signals had switched. So we're in a downtrend, we're in a premium, and we're trading below the daily previous low. This is where buys can be very, very, very dangerous, and how a lot of people ruin their accounts. It's a point of liquidity that you can now get into the market for a buy. But you see, if you take out your ruler and you look at how far price expanded, okay, down below it. So, now it's trading 46, but it was trading 188 points below the daily previous low. Okay, so that is expansion on the way down. That is not a sweep of the daily previous low. A sweep shouldn't go any deeper than 60 to 90 points, 90 points tops. It's no longer a sweep. And I'll only allow 90 if it's into a high time frame fair value gap, like in this case, I would have gone 90 points past. Now, if you wanted to get in, you would be looking for sells, okay? Because you're in a premium and the trends are down. Okay, that's your best friend, is now looking for trading on trend, not the reversal. You're going to save your account. I'm going to say this again. You're going to save your account by listening to me. So what you want to do in this case is, all we can do here is go to the 15-minute and look for the high of the range, which is up here. And this right here is the open, 630, and it took all this liquidity out here. So we can use the high of the open. Most of the time you want to use the high of the range, the low of the range down here, high up here. So in some circumstances, you can use the high of the day opening, the range of the day, we'll call it, and this wick right here, the US open, sorry, this wick right here swept liquidity, so we can count that as a high. It's a massive pullback as well. So we use the high of the range of the day, sorry, all the way to the low. Let's mark in our 50% of the range. Call that the micro range in here. Let's move down to the 1 minute and look for a sell. If it's the market retracing, balancing the order book to the 50%, right, on the sells. So it's an equal amount of buyers to sellers. They're going to balance the books out here. It's come up to 50% of this micro range right here. And when this crosses into a signal, the example just happened to work out in real time as we were doing this, but this is where you want to take the sell and not the buy. This is when you trade trend friendly. Having patience is key. Knowing that the market wants to come down below this discount, into this discount range here, into a form of PD array, an order block. Do not FOMO in. These are low probable moves, and you want to trade with the trend. So here we have a sweep at the 50%, so you can almost count that as liquidity. I shouldn't say almost, you can. We have your cross, the 50-20 on the downside. You take your GAN box to the short-term low right here. We're looking for the short-term high. So in this case, the short-term high would be up here, 50% of the range right here. Could your stop loss, because the first thing you want to do is you want to see if your stop loss is doable first. So above the short-term high here, you're looking at an 18-point stop loss. So let's take a 1 to 2, okay? And there's a short-term low rate over here. Gives you a 1 to 2. And our entry is sitting right up here. So we haven't got our entry yet. Let's see, I'll fast forward. If price ever comes back to the 50% of this little mini micro range that I've put into GAN box. Now, normally what you want to do is you want to find PD array above the 50. So you have the 50% here. You're looking for a fair value gap, like right in here, for it to come back to. If there is none, you can get in off the signal here as long as your stop loss can fit above the short-term high. So as the signal is right now, it's right here. You put it above the short-term high, and you got a 30-point stop loss. Very doable. In this case, just for the sake of it, Let's put it back to 50% of the micro range, and let's see if price comes back to it. I will fast forward it, and let's see. So a 5-minute bearish gap appeared. We're going to enter this trade right now with a 17-point stop. We're in. And we're set at a 1 to 2. We have an 18-point stop loss. We're going to use the same amount of risk. It doesn't matter. 17 points, 50-point stop loss, 60-point stop loss, which is my max. It's going to be the same amount of risk. So we are on trend here. We have broken the short-term lows. We've closed over it, but I'm not going to move my stop loss until there's a second short-term high that's created and then the low is broken. And you can see the value of this fair value gap nephew Sam here. This 5-minute gap appeared, which told me to get in right away. If I didn't have that, I would not have known, right? It doesn't have to come back to the 50% if your stop loss can be above the short-term high. And I'm sorry, the short-term high is here. I made a mistake. So we need to increase the take profit here to a 1 to 2, which is right here. And there's a short-term low right here. And by the way, if you're saying, oh, it's only 45 point stop loss, it's the same target for me, no matter what it could be 90 points, 100 points, 120. I use different leverages for different stop losses. A 1 to 2, the reward is the exact same to me as it is no matter what. If that doesn't make sense, please message me. We're going to leave our stop loss because the trends are down. And when the trends are down, we're not going to move our stop loss when it breaks the short-term low until it creates a second, short-term high. Broke the short-term low. It needs to create another short-term high before I jam my stop loss to break even. But we can see we've created fair value gaps here now, and we're below. What you want to do is just measure out your trade to fruition. Oh, I'm sorry, wrong tool. We are trading below 50% of the trade and a fair value gap was created. We can now go to break even. So 50% of fruition, which is right here. Sorry, I must have got the GAM boxes mixed up. And there we go. Take profit is hit. Right on. A 1 to 2. Again, 12:53 p.m. I would never trade at that time. I am just showing exactly what I would do in real time because I traded with the trends. I didn't get all hung up here trying to get into this buy right here, right? The trends are down. All it's doing is retracing to this 50% of the micro range, of the 15-minute range. It's balancing the order books out, the buyers and sellers on the stock exchanges. We're going to do a quick breakdown of what it is. And that is, of course, the trends were down. We're trading below the daily previous low. So bearish with the trends. And we're trading in the premium range of the trade. Okay. That's triple bearish, which is you're looking for sells today, not buys. However, let's say price did sweep this swing low here. So you have the 1 hour. Here's a swing low. People are going to look for buys here. Don't do it. The trends are down. You're trading in a premium, which means you're looking for sells. And you're trading, the biggest thing is trading below the daily previous low. And just like that, I showed you exactly how to capitalize off a kill shot entry, right? Using ICT techniques and smart money concepts. Hope that makes sense. We're back trading. I'll let you know what dates I'm going to start on. It's the Christmas holidays. I'm not sure when I want to go back. We'll be doing every trade live, recording every trade, showing you every move and doing a recap of every trade in 2026 unless I'm not trading. Have a good day, and please, if you can, hit the subscribe button, hit the like button, and ask questions, please.